because they're going to have negative cash flows, and if a lot of these do shut down, then there'll be actually less oil and gas to ship through the pipelines, which will affect their earnings. So it's hard to determine at this point how that's going to play out. I just bought TransCanada because it's got about 80,000 kilometers of pipeline. It's one of the biggest players, and they're still going to have to transport fuel around the United States, for energy. So I thought I'd just buy a small amount of that. I also did increase some short positions. I'll mention in my comments. One's WD-40, another one is some of those MTD trades on the New York, and DXCM. As I said, most of my short positions are kind of working out now, and I'll probably be able to hold them for a little bit, hopefully for another month or 2 or 3 before I start closing those out, and then whatever leave that in cash, or maybe start moving towards the long side again. But again, the time frame of doing that is kind of unknown at this point. So talking about the bonds, so investment grade bonds could turn to junk amid global rout. So this is coming from the Wall Street Journal. It says economic fallout from the coronavirus and collapsing oil prices are sparking a deep decline in the $3.4 trillion market of corporate bond debt with BBB credit rating. So BBB is kind of the dividing line between kind of good corporate debt, and then junk debt is below that, and we can see those rates starting, and the spread between the treasuries, which is the safest bond from the government, start to spread between that and the corporate BBB bonds starting to widen quite a bit, and I have that on a spreadsheet here. And we can see, this is all taken from all this data. If you have Excel, you can get, install a Fred add-in. Just go to the Federal Reserve website, and you can download all this data directly into a spreadsheet. And you can then update it using that add-in. So here we can see the spread was just a month ago for BBB corporate rated debt was at just down here, just above 1%, about 1.2, and now it's spiked up to almost 3.8%. So percentage-wise, that is huge, and we can see back in the financial crisis that went almost to 8%. So there's a lot of companies out there that are leveraged that just couldn't afford to make the interest payments, and could end up going into default or bankruptcy. And on the junk bonds, which is one classification lower, we've seen the same thing, where the spread was about 4, and we've seen that jump up to about 8 now. But in the financial crisis, this went all the way up to 20. And I would think the same thing or worse is going to happen this time. So any corporation with a large amount of debt, which a lot of companies I've talked about have been using cheap debt to buy back their shares. Now they're going to want to try and load this debt if they can. They might want to issue more shares instead of buying back shares, and that's all going to affect the earnings, which I think is just going to drive the market down lower as it plays out. So that's why I'm still kind of bearish. A lot of other technical indicators I look at are just kind of still saying we're kind of in the early part of this bull market. The 12-month rate of change indicator that I talked about last week just went to -10. I said that one we typically want to see go to -20, then back up above -20. and so I'm watching that. Just to talk a little bit about Emira. One reason I like it, it's got a 5.27% dividend, which is safe. It's got fairly robust growth plans for big utility. It's trying to drive its rate-based growth in the near term and medium term, and a healthy increase, and also getting a healthy increase in operating cash flows and dividends. And Emira focuses on regulated assets and utilize cash flows to further bolster its balance sheet. So regulated means it's set by the state how much they can charge for electricity, and usually they've in the past they've get a fairly good rate of return on their assets, and through negotiations with the government, and we know it's stable and something that cash flow that can be relied on. So many companies now, it's so difficult to determine what their future cash flows is going to be. They're still growing. The 3-year capital plan is spend $6.9 billion by 2022. And again, 99% of that money will be for purchasing or investing in regulated markets. And it's going to be funded 50% by operating cash, because it got high internal cash flows, 25% from debt, and 20% from drips. So that number might change a bit as I've talked about. Bond yields might be coming up as a whole across the board for corporate bonds, and if it gets to above their kind of burden rate, then they would not, they might cut this capital spending back. But they also might see it a good time, a good opportunity to expand. They also have natural gas. They have 4,000 customers in Florida for gas distribution, again regulated. And they expect, I look back for this company, that they were paying an 18-cent quarterly dividend in 1992, and that quarterly dividend has now gone up to 61 cents. So it paid a dividend every year, every quarter, and the dividends increased every year. And it's kind of diversified. They produce electricity in Florida, Bahamas, New England, Nova Scotia, New Mexico, and have a total customer base of 2.5 million customers. And there was one report I read through TD Art they had, which are pretty good. They had a stock price of $62 before this coronavirus really took hold. So, but right now I'm picking it up at $47, so getting a reasonable dividend. And maybe over the next 4 to 5 years, it moves up to the $60 area, which would be almost 50 some odd percent. So we could get a combined total return, capital gain plus assets of maybe around 10%. And if you get that on a stable utility in this environment, I think that makes that an excellent investment. Anyways, that's all I really have for this week. Like I say, I'm staying bullish. I'm still probably about 90%. I'm staying bearish, and I'm still 90% in cash, and short, and still doing the short calls. And I don't see any major changes probably for the next month or so. But I will pick up the odd company like Emira or add to them if they start to start to show improvement. Okay, so that's it for this week, and hope you all come back and tune in for my video next week. Thank you.